Hey, it's Mike, and for today's video on stock market strategy, I want to take a look at how to find quality stocks in challenging markets because the market has been challenging for a while. And I do think while we will have a nice rally in April, I do think over the summer it's going to be more of a stock picker's market. So I just want to show you what I look for in a quality stock when I'm going to consider it for an investment. And it's really just sort of a four-step approach that I take that just allows me to create a short list of stocks to look at before I make an investing decision. So I'm going to go ahead and share these four steps with you. So let's start with step one. First, I look for stocks with a PE ratio. And I know that sounds very simplistic, but you'd be surprised how many stocks out there, especially if you look at the small cap stocks and more speculative stocks that don't even have a PE ratio. So what is a PE ratio? PE ratio is calculated by dividing the share price by the earnings per share. So just an example here, let's take ABC company has a PE ratio of 15. That means that the current market value of ABC company is 15 times its annual earnings. That means it would take you 15 years to earn your money back through annual earnings. So it basically takes the price, the value of the company, and the annual earnings, and you just sort of multiply that, and you get the PE ratio. So usually right now, I look at companies that have any PE ratio, especially in a stock market that's this rich. So I kind of look at the larger companies in the S&P 500. Even if they have a PE ratio that's higher than the average, if it could go as high at 40 or 45, I will still consider that company because people will be looking for any company that has a PE ratio that has earnings, pretty much. So that's the first thing I do. I look at the PE ratio. The second thing I look at is I look at stocks that are within 5% of its 52-week high. And that's because these stocks will already have a lot of momentum and a lot of investor interest. And these stocks are much more likely to hit their 52-week high. And stocks that hit their 52-week high are likely to move higher. So this is generally looking at stocks that are trending really well in the face of a challenging market. You'll see a lot of more money kind of flow into these companies. Now, the third thing I look at is I look at stocks that are kind of leaders in their industries or companies that are leaders in their industry because they'll tend to get the majority of the money coming in a challenging market. So, for instance, with retail stores, Walmart, electronics, Apple, e-commerce, Amazon, home improvement, Home Depot. Just look at the big established names because in these times, when there's a flight to safety, people will go to companies that they sort of know and understand. So you definitely want to take a look at these companies. Now these companies may not fall under the other two criteria of being within 5% of the 52-week high or having a lower PE ratio. But this is just another way to set up your list of stocks to look at. And then you go from there. You start eliminating stocks that do not fit in the other criteria. And finally, the thing I look at stocks that pay a dividend higher than the S&P 500 average or the 10-year note average. So currently, the S&P 500 average dividend payout is about 1.45, and then the average for the 10-year note average for the 10-year is about 1.63 or 64 right now. So if I can find ideally a company that fits under all the other criterias and has a dividend paying over 1.64, I will definitely put it on my list to buy. And even if it's above 1.45, which is the average of the S&P 500, I would consider that as well. But I just want that higher dividend because that's another thing that investors will be looking for in challenging times. So once again, you might take a look at a company that has a relatively low or competitive PE ratio. It's within 5% of its 52-week high. It's a big established company that's a leader in its market. And finally, it has a dividend that's paying higher than the S&P 500 average or the 10-year note average, which is currently 1.45 for the S&P 500, and for the 10-year is about 1.64. So in conclusion, knowing how to find quality stocks can help you save money during challenging market conditions because when it comes to investing, it's not just about making money, it's about preventing yourself from losing money that will keep you in the game. Because in the end, it's really all about time, the time you spend in the market. As they always say, time in the market is better than timing the market. So I hope these four steps have been really helpful for you. They've been really helpful for me. If you enjoyed the video, please be sure to leave a like and go ahead and subscribe and turn on notifications. I do multiple daily updates on stocks, stock trading strategies, and market updates. Thanks a lot. Bye.